We're losing massive. We don't need their cars. You know, they make 20% of our cars. We don't need that. I'd rather make them in Detroit. We don't need the cars. We don't need their lumber. We have massive fields of lumber. We don't need their lumber. We don't need anything they have. We don't need their dairy products. We have more than they have. We're on time with the tariffs, and it seems like that's moving along very rapidly. If you look at Canada, it would be cherished as a 51st state. They don't pay their share of military in NATO. They pay very little for military. They're not protected at all. And the reason is they think we're going to protect them.
What if I told you that Canada is standing at a historic crossroads right now, at a point where its long-standing reliance to the United States, its closest neighbor and largest trade partner, might actually be its greatest vulnerability? Protectionism, trade wars, tariffs. The relationship between Canada and the US has taken a sharp turn in recent times, and the future is uncertain. In the face of these challenges, some are suggesting that it is time for Canada to break free from this decades-old dependency. But where do we go from here? Should Canada look eastward, away from the US, and embrace Asia's growing demand for oil, gas, and other resources? Let's dive deep into this as we explore what's at stake and the potential rewards and risks of such a move. The historical trade relationship. For most of the 20th and 21st centuries, the trade relationship between Canada and the US has been rock solid. In fact, it is one of the largest trading relationships in the world. The US has been Canada's number one trading partner for decades, and geographical proximity, shared values, and a well-established infrastructure have made this relationship practically inseparable. In simpler terms, Canada has had a good thing going with the US. But recently, especially under the leadership of Trump, this once rock-solid bond has started to show cracks. Trump's America First rhetoric made it clear that the US would prioritize its own economic interests, even at the expense of its allies. New tariffs, trade deals, everything is up for renegotiation. And Canada found itself at the mercy of the most protectionist US government. The Trump era, a wake-up call. In the past, tariffs were a distant threat, but now they have become a reality. In fact, the Trump administration is imposing tariffs on steel and aluminum from Canada, two critical industries for this country. Add to that the 25% tariffs slapped on all Canadian goods like cars and lumber, and suddenly Canada's trade surplus with the US was at risk. The very foundation of Canada-US trade relations is no longer as predictable as it once was. But what does this mean for Canada? It's not just about numbers on paper. These tariffs serve as a stark reminder that Canada's heavy reliance on one market, especially a volatile one, comes with serious risks. And with trade wars brewing, there's always a looming possibility that the US could impose more tariffs on Canada's energy exports, leaving the country scrambling for new markets. Canada's energy resources. Canada is no stranger to energy production. In fact, it's one of the largest oil producers in the world, particularly thanks to the oil sands in Alberta. The country also has significant natural gas reserves, which makes it an important player in global energy markets. However, Canada's energy exports have historically been focused on the US, a market that has shown increasing unpredictability. Now, with the risk of trade wars and political tensions rising, Canada is recognizing that relying on the US for energy exports is not the wisest strategy moving forward. As countries like China, India, Japan, and South Korea continue to grow, their energy demands are skyrocketing. These countries are now looking beyond traditional suppliers in the Middle East and Russia and are eyeing Canada as a potential energy partner. Before we move further, if you are finding this video helpful and want to support this channel, you can drop a super thanks below. It means a lot and help me keep making videos just like this one. Thank you so much, and now back to our topic. The Asian market, a potential lifeline. The rise of Asia as a global energy player is hard to ignore. China and India alone have populations of over 2.5 billion people, and both countries are industrializing at a rapid pace. As their economies expand, so does their demand for energy, oil, natural gas, and other resources. Japan and South Korea are also heavily reliant on energy imports and are looking to diversify their sources. For Canada, this presents a unique opportunity to step in and provide a reliable, secure, and stable supply of energy to these fast-growing economies. Unlike the volatile political climate in the Middle East or the sanctions on Russia, Canada offers a level of geopolitical stability that could make it an attractive alternative for Asian countries looking to diversify their energy imports. The road to Asia. The challenge is ahead. But of course, it's not going to be easy. There are significant challenges in getting Canada's energy exports to Asia. First and foremost is the issue of infrastructure. Canada's energy infrastructure has long been designed to serve the US market alone, with pipelines running southwards and no real capacity to get oil and gas through the Pacific. However, things are changing. Infrastructure projects like the Trans Mountain Pipeline expansion are underway, which will help Canada ship oil and gas to Asia through the West Coast. This is a critical development because it bypasses the need to rely on US infrastructure, allowing Canada to access new markets. But it's not just pipelines. Liquefied natural gas, the LNG, is another major growth area. Canada is working on LNG export terminals, particularly in British Columbia, which will help facilitate energy exports to Asia. The $40 billion LNG Canada project is a prime example of this, with backing from major companies like Shell. The environmental factor. Can Canada go green? Of course, Canada faces challenges on the environmental front. The oil sands in Alberta are known for their carbon intensity, and many environmental groups have voiced concerns about the environmental impact of pipeline projects. There are also indigenous communities that need to be consulted about the construction of new energy infrastructure, which can further delay the progress. However, Canada has an opportunity here too. As the world shifts away from coal and oil, natural gas is seen as a cleaner alternative, especially for countries like Japan and South Korea that are looking to reduce their carbon footprint. Canada's LNG could serve as a bridge fuel in this transition, offering a more substantial energy option while still contributing to global energy needs, competing with the heavyweights, Middle East and Russia. The Middle East and Russia are major players in the global energy market. Saudi Arabia and other OPEC countries have long had a stranglehold on the oil market, and Russia has been a key supplier to China and India. So, can Canada really compete with these heavyweights? While Canada has its work cut out for it, it does have a significant advantage: geopolitical stability. The Middle East is often plagued by political instability, while Russia faces sanctions that limit its ability to do business with certain countries. Canada, on the other hand, is a stable democracy with strong rule of law, which makes it an attractive option for countries looking for a reliable energy supplier. Strategic diversification. The shift to Asia is not just about boosting energy exports. It's also about strengthening Canada's geopolitical position. By diversifying its energy exports, Canada could reduce its dependencies on the US, making it less vulnerable to future trade wars or political tensions. This would give Canada more leverage in its dealings with the United States and other global powers, while also ensuring that it has access to more diverse market in the event of future crisis. Looking ahead, the future of Canada's energy exports. The road to Asia is full of challenges, but is also filled with immense opportunities. Canada has the energy resources, the political stability, and the infrastructure projects in motion to become a key player in the Asian energy market. But it won't happen overnight. Canada will need to continue to build the necessary infrastructure, secure long-term contracts with Asian buyers, and address environmental concerns in order to make this vision a reality. But if all of these factors align, Canada could find itself at the forefront of a new global energy market with a diverse range of trading partners and a more secure geopolitical position. So, can Canada break free from US dependency and make a successful pivot to Asia? The opportunity is certainly there, but so are the challenges. What do you think? Should Canada make this move, or is it too risky? Let me know your thoughts in the comment below. If you enjoyed this analysis and want to stay updated on Canada's future in the global market, make sure to subscribe and turn on the notification bell. Thank you so much for watching, and I'll see you in my next video.